Hello traders. Welcome to KP Technical.
What is a candlestick? A candlestick is a way of displaying information about an asset's price movement. Candlestick charts are one of the most popular components of technical analysis, enabling traders to interpret price information quickly and from just a few price bars. Six bullish candlestick patterns. Bullish patterns may form after a market downtrend and signal a reversal of price movement. They are an indicator for traders to consider opening a long position to profit from any upward trajectory. Hammer. The hammer candlestick pattern is formed of a short body with a long lower wick and is found at the bottom of a downward trend. A hammer shows that although there were selling pressures during the day, ultimately a strong buying pressure drove the price back up. The color of the body can vary, but green hammers indicate a stronger bull market than red hammers. Inverse hammer. A similarly bullish pattern is the inverted hammer, the only difference being that the upper wick is long, while the lower wick is short. It indicates a buying pressure, followed by a selling pressure that was not strong enough to drive the market price down. The inverse hammer suggests that buyers will soon have control of the market. Bullish engulfing. The bullish engulfing pattern is formed of two candlesticks. The first candle is a short red body that is completely engulfed by a larger green candle. Though the second day opens lower than the first, the bullish market pushes the price up, culminating in an obvious win for buyers. Piercing line. The piercing line is also a two-stick pattern, made up of a long red candle, followed by a long green candle. There is usually a significant gap down between the first candlestick's closing price and the green candlestick's opening. It indicates a strong buying pressure as the price is pushed up to or above the mid-price of the previous day. Morning star. The morning star candlestick pattern is considered a sign of hope in a bleak market downtrend. It is a three-stick pattern, one short-bodied candle between a long red and a long green. Traditionally, the star will have no overlap with the longer bodies, as the market gaps both on open and close. It signals that the selling pressure of the first day is subsiding, and a bull market is on the horizon. Three white soldiers. The three white soldiers pattern occurs over 3 days. It consists of consecutive long green or white candles with small wicks, which open and close progressively higher than the previous day. It is a very strong bullish signal that occurs after a downtrend and shows a steady advance of buying pressure.
For more stock market updates, subscribe KP Technical.